Right, so if I can just get into the detail. Initially, there's some really nice little pictures in, it's always difficult with buildings the size of what Growthpoint owns to encapsulate the entire building in one picture. But I think we do have a couple of really nice pictures in the presentation, this being the head office of Absa Capital in Sandton, part of the Alice Lane precinct, and part of the Tiber portfolio that we acquired recently. We own this property in partnership with Zenprop. That's a little picture of the V&A waterfront, very recognizable, obviously, and as Mike said, the Cape Townians, not only do they not really believe Cape Town is part of South Africa, every Cape Townian also believes that he or she personally owns the V&A waterfront. So what you do there is very critical, or they are very critical of what you do there. Brief introduction. For those of you who've been with us for a while, this is probably old news, but we are the largest REIT, as Mike mentioned. Total property assets at about 76.2 billion. That does include 100% of the Australian entity, Growthpoint Properties Australia, or GOZ, as we often refer to it as, and then our 50% of the V&A waterfront. At balance sheet date, we also held listed investments in AccuCap and SciComm, 4.5 billion rands worth. We acquired these strategic stakes between April and May of this year, and we did publish a cautionary announcement yesterday. You may have seen that just prior to the release of our results, confirming that we are in discussions with AccuCap. AccuCap today own about 83% of SciComm. Growthpoint owns about 15, so between us we own 98% of SciComm. So in essence, there's no really any reference or need for reference to SciComm anymore. We're just talking to AccuCap. They're always managed by SciComm is always managed by AccuCap anyway, we're having discussions around Growthpoint obviously looking to increase its stake above the initial strategic stake that we bought. Market cap at 30 June, Mike was 56. As Mike said yesterday, it was probably about 59. We own 436 properties across South Africa. Australia's got 51 properties. We own 64% of the Australian entity. And then the V&A is a 50-50 partnership between ourselves and the PIC on behalf of the Government Employees Pension Fund. At 30 June, the retail portfolio is valued at 15.8 billion. The office portfolio, 24.3 billion, obviously a marked increase in the size of that portfolio post the take-on of our acquisition of Tiber and AppSec. Industrials at 9.3 billion. The Australian entity now has $2.1 billion worth of properties, and that translates to just about 21 billion rand. That is 100%, obviously. And then the V&A waterfront property values at 5.9 billion. One of our key features, or maybe in the early days was a big differentiator, Growthpoint versus many of our competitors. No longer are we the only ones who own and manage our own properties, but certainly one of the part of our culture, if you want, that we inculcate in the organization with our staff is that we own and manage our own property portfolio. And we've got 528 staff across the country in 3 offices in Cape Town, Durban, and Sandton. And that excludes the staff at the V&A waterfront. Obviously, V&A waterfront runs totally independently. There's strategic input from ourselves. But there's about 170 odd people at the waterfront, and then the Australian entity's got 12 people that sit in an office in Melbourne. If you look at the highlights for the period under review, firstly, distribution growth of 8.3%, slightly or a bit ahead of the forecast we put out at the beginning of the financial year, which was in the order of about 7.2%. If you look at the average annual growth over the last 5 years, that's sitting at just over 7%. During the year, we invested another 1.9 billion rand into the Australian entity. So our total cost of our investment there now sitting at 5.3 billion, and the market value of our investment sitting at 8.4 billion. So a pretty decent capital profit that we've managed to accumulate on that investment over time. That 8.4 billion is also reflected at, I think, $2.45, which was the price at 30 June. A week ago, the Australian entity released its results, and I think the market took a bit of a fancy to the results. Slowly but surely, liquidity is also being, is coming into that stock as the free float of it has increased over time as we've grown it. And based on yesterday's closing price, I didn't see it this morning, but it was trading at about 267. The market value of that investment now would be over 9 billion. Aussie produced a 25% return on the 5.3 billion invested, made up of about an income yield of 12.7% and capital growth of 12.3%. This for the period to June 30, 2014. We raised equity, about 2 billion of new equity during the period through our distribution reinvestment plan. We have been getting about a 66% participation rate in that. And as you would have seen from yesterday's results, we are offering the distribution reinvestment again as an option. Final pricing to be made in the next couple of weeks. We made the acquisition of the Tiber portfolio. There was a 5.7 billion rand acquisition. And as part of that acquisition, we issued 2 billion rand worth of equity, 2.1 billion rand worth of equity, which the vendors took. And obviously, prior to completing this transaction, we did do the quite substantial capital raise in May 2013 of 2.5 billion rand. The bulk of that cash obviously used to settle the balance of the purchase price. We bought the ABSEC portfolio for 1.3 billion, and about 369 million rand worth of equity was issued to partly fund that. And then our investment in AccuCap at a cost of 3.3 billion, giving us the 34.9% holding in AccuCap, and the investment in SciComm at 1.2 billion, giving us the shareholding of 23.2% in SciComm. I think we're very proud of the awards down the bottom of that slide. So for the third year running, Growthpoint received, or was the winner of the award for the best reporting and communication in the property sector. And then for the first year, we were also the winner of the overall winner for best reporting and communication amongst all the listed companies. So we're very proud of that, and a big thank you to the entire finance team that were involved in producing those reports. Distribution growth over the last 5 years, ranging from between 6.1% growth from between 12 and 11. I think that year was impacted by the take-on of the V&A waterfront at the time, and the decision that we took at the time to expense interest on all of the unutilized bulk which we had purchased as part of that acquisition. That impacted our growth in that year, ranging between 6.1 and the 8.3 we declared for this year. Final dividend for the year is 82.8 cents for Growthpoint, taking the total to the 161.3. This graph gives you just a trend, if you want, of the growth in assets, growth in market cap over the last 4 years. On the left-hand side, off the left-hand side scale, you can see how the tangible assets in the green bar graph have moved from about 30 billion to close to just over 70 billion at the moment. And market cap has grown from just on 20 billion to the 59 odd billion. Share price is depicted with the orange line, and the net tangible asset value per share, the blue line graph, and that reads off the right-hand axis. So steady growing trend, which I think is what one would like to see from a property company, and we hope that we can continue this trend going forward.